Good afternoon, everyone. Thank you for joining us. Today we have an update with Sailfish Royalty. CEO Paulo Lostrito is with us today. Sailfish has had several press releases out this year. The format of today's session will be an update followed by Q&A. So if you have questions, please put them into the comments box. I believe it's the right-hand side of your screen. And before we begin, as always, today's presentation will contain forward-looking statements. You can learn more about those and the presentation on the company's website. And welcome, Paulo. Good to see you.
Thank you for having me, Magda. And thank you, everyone, for joining us here today.
Awesome. And you've got your presentation?
Yeah, there we go. Thank you. That's what I was waiting for. So I endeavor to rip through the formal part of the presentation really quickly because there's probably more value added coming from the Q&A session. Some forward-looking statements before we go into it. So what is Sailfish? Sailfish is a precious metal royalty and streaming company. We're backed by a group called Adelaide Capital, a strong backer that has a track record of creating large companies. One of them is, of course, Viper Energy. In addition to that, we're hyper-focused on returning capital to shareholders through a share purchase program and a dividend policy. So a little bit of our capital structure. We're 63% owned by Wexford. We have management and directors that own just under 6%. Stevens & Co., this is Paul Stevens, that owns just over 7% of our company, and the rest is retail. Based on recent trading, we're roughly an $80 million US market cap company. We've got just over $2 million in cash. Our debt structure is about 3.9 million via a convertible debenture, and we pay annually a 5 cents per share US dividend. And what I hope to show over the course of the next couple of slides is how that share price is not reflective of the fundamental value. And we're going to get a number of triggers over the course of the next couple of months that's going to show that. So we have solid cash flow in that we have about $6 million a year coming from Nicaragua. And we're structured as a option structure on the Spring Valley asset. And I'll go into it in detail, but basically you're looking at one of the largest development projects in the continental US, reserves of 3.8 million ounces of gold. It has a 10-year mine life of over 300,000 ounces a year. The first 5 years are going to average over 148,000 ounces of gold per year. You have a M&I resource of 4.4 million ounces and an inferred resource of an additional 600,000 ounces. All of this is being calculated with $1,700 gold. So you could imagine using the current gold price of just over $2,900 an ounce, what that would mean in terms of potential resource expansion. And there's lots and lots of exploration upside along the trend and further north to another project called Moonlight that we have an additional 2% NSR on. And like I said, we're focused on returning capital shareholders, both through an aggressive share repurchase program through our NCIB and our dividend policy. So some of the key news that we've been tracking over the course of the last several weeks, we've had a White House executive order basically talking about streamlining the permitting process. And subsequent to that, we actually had the draft EIS filed by the Bureau of Land Management. And shortly thereafter, the operator, Solidus, announced the highlights of their updated feasibility study that was put forward not too long ago. In addition to that, we also adopted a dividend reinvestment plan, and that'll give us additional flexibility over the course of 2025. So what to expect over the next little while? We have the exercise of the silver option that we're working through right now, record of decision that's expected on Spring Valley by the middle of this year, and that would mean that the project is ready for construction in the second half of 2025. And in addition to that, we're expecting the operator of the San Albino project to actually do some underground test mining in November of this year. Just tracking a little bit of our cash balance and our revenue, we should, once this dividend reinvestment plan kicks in, which is expected shortly, you should see the cash balance track higher towards the $3 million, $3.5 million mark by the tail end of 2025. Highlighting our dividend policy relative to the other royalty companies in the space, you can see we have a fairly high payout ratio, paying investors to be involved in our stock. Our team, we have Akiba Leisman, who's our co-founder and executive chairman. We have Brian McKenzie, who's our CFO, and myself, the CEO and director. I was a former mining analyst. We keep our team small for the sole purpose of structuring Sailfish as a pass-through so that cash flow goes to shareholders. So a bit of an asset overview. Our crown jewel asset, as I mentioned before, is Spring Valley, with reserves of 3.8 million ounces of gold and resources approaching 5 million ounces in totality. Adjacent to that, we have the Moonlight project, where we have a 2% NSR. There are no resources on that ground as of yet, but the structure carries over from Spring Valley towards Moonlight. Gavilanes, we just structured a deal where we're bringing in a partner that is going to be exploring Gavilanes. That is expected to be finalized in May of this year, and we're retaining a 2% NSR. We have two other non-producing royalties in La Cigarra and El Compás, 1% NSR and 1.5% NSR respectively. And then our cash flowing assets, which is the San Albino stream / royalty and the silver purchase agreement, whereby we're getting 13,500 ounces of silver per month. And that is set to expire in May of this year, but we have an option to purchase all remaining silver production from the ground that was part of the original deal, and we're looking to exercise this here shortly. San Albino is one of the highest grade open pit gold operations globally. You're looking at a deposit that's generating north of 7 grams of gold per ton from an open pit. The majority of the production is coming from a region called Las Conchitas, whereby we have a 2% NSR. And then the other asset where we've touched on briefly is the Spring Valley asset. So you're looking at up to 3% NSR on a resource that is north of 5 million ounces, reserves of 3.8 million ounces. This is in Nevada. It's open pit heap leach. The plan of operations was filed with the BLM. Record decision is expected middle of this year, and construction is guided towards the second half of this year from the operator, with first gold in 2028. Zooming in a little bit on San Albino, you're looking at a series of stacked orogenic veins. They're about 30 degrees dip. The mining up until now has been focused on a series of shallow open pits. Historically, the majority of the production was coming from the San Albino deposit, which is highlighted on the map to the left. Now, the majority of the production is coming from an area called Las Conchitas, which is just to the south. And we're looking for underground test mining to occur back at San Albino in November of this year. This is over and above the current production rates, which the company has provided and passes through to us in the form of a NSR / stream. So San Albino historically was around 35,000 ounces a year of production. Las Conchitas is trending at roughly about 40,000 ounces per year of production. Spring Valley is in Nevada. It's in Elephant Country. It's west-southwest of Winnemucca. It is adjacent to the Coeur d'Alene's Rochester mine, which is a fairly large primary silver mine in Nevada. The asset, it's important to highlight the map to the right here is flipped on 90 degrees, so north is to the right. So just north of the Rochester mine, you've got the Spring Valley asset, And then north of that, we have the Moonlight project where we have a 2% NSR. So zooming in, we've got 3 sets of claims. The majority of the resource is on the 3% ground, which is depicted in blue. Then we have a 1.5% NSR just to the northeast of that blue claims, which is 1.5% NSR. And then everything surrounding that is a 0.5% NSR. So you're looking at a project, the first 5 years is going to average 348,000 ounces of gold per year. And over the life of mine, average over 300,000 ounces of gold production. We have, as I mentioned earlier, the majority of that resource falls within the 3% NSR. But in order to be conservative, we kind of guide that it'll be a mix of the production from those areas. We don't actually have a mine plan as of yet. The operator is planning to file the technical report by early April. And so at that point, we should have a better sense of scheduling and the actual better clarity in terms of cash flow and how that flows to us at Sailfish. But right now we're kind of guiding between $15 and $25 million a year in terms of cash flow to Sailfish. And that's a material increase from the current $6 million a year we're getting from our operations. So important to highlight, and this takes a little bit of sleuthing, but it's important to highlight. So if you look at the feasibility study, it contemplates 243 million short tons of ore being processed. And that was designed based on $1,800 gold. Of course, gold trading at just over $2,900 an ounce, you would expect that there's a potential for a scope change. However, if you drill into the plan of operations, which is actually being used as part of the permitting process, it actually contemplates 323 million tons of ore. So that's almost 33% more ore being processed than what's being put forward in the feasibility study. So it's highly likely that the production profile, once this thing is up in operations, is going to be higher than what's outlined in the feasibility study. So it's an important bullet point for investors to have in mind when they're doing the math with regards to the implications to Sailfish. Moonlight, as I mentioned earlier, we have a 2% NSR on that. That's just north to the Spring Valley asset. There are no resources on that ground, but there's a lot of evidence, if you look at some of the technical reports that are out there, that shows that the Black Ridge Fault, that is the main controlling feature that cuts through the Spring Valley asset, actually trends through onto the Moonlight ground. So we're very excited about what the implications are to Sailfish on the exploration of that asset as well. El Campas, where we have a 1.5% NSR. It was a former producer. No production on our ground as of yet in the short term. And another non-producing asset called La Cigarra, where we have a 1% NSR. Digging into the Gavilanes deal a little bit. So this was an asset that we owned outright, 100% in Mexico. It had just over 22 million ounces of silver equivalent, of which just shy of 19 million ounces of that was actual silver. We did a bunch of mapping and sampling and trenching and found 8 new veins on the ground. It behooved us to want to move that project forward, but at the same time, we as a royalty company felt we shouldn't be spending exploration dollars on from the cash flow that we're getting from a royalty. So we found a partner. That partner is going to be drilling the project aggressively. We're just waiting for some details with regards. There was as part of the exploration permit, there was a clerical error back in 2020 during COVID in terms of filing. So we're having to rectify that. That should be done by late April, early May. That deal will close, and then the new operator, Advanced Metals, will be going forward with drilling that project, and we look to benefit through our 2% NSR once that transaction closes. So with that, I'm happy to take any questions. I'll leave the last slide here that shows the resources and reserves on the Spring Valley asset.
All right, thank you, Paulo. So just to start off with some Spring Valley questions, could you discuss the timeline for the Spring Valley asset and how the recent news has pulled timelines forward from previous expectations?
Right. So because the asset was owned by a private equity group, there was no clear direction provided to the public markets in terms of timing of permitting, nor was there timing on and scope, an understanding of scope of what the actual asset looked like in the public domain. And what's happened over the course of the last 18 months, and mainly in the last, I'm going to say 6 weeks, is that we've gotten clarification through the BLM in terms of the actual permitting process and actual definition of scope through the updated feasibility study that was published in February. So once that feasibility study is made public in early April, it should provide better clarity in terms of scheduling for the market to digest the actual cash flows to Sailfish through that mine plan. The way I would guide people right now is you're looking at permits being issued by June of this year, and that the operators announce that they're going to start construction shortly thereafter, after the permits are granted. So that would allow for first gold in 2028 and start cash flow to Sailfish. And like I said, it's a material asset. This is a big boy asset. It transforms Sailfish as a company in terms of its valuation. And given that we have a high payout ratio, one of two things are going to happen. Either one, Sailfish is going to cease to exist because it's sold to a major, or two, we're going to significantly change the amount of cash being paid via a dividend at that point in time.
Got it. Thank you. And can you speak a little bit about the operator of the Spring Valley project?
So Solidus is owned by Waterton. Waterton is a private equity group. They have hired in the past top tier consultants and top tier engineers to try to move projects forward. They've announced to the market that they're planning to build. My expectation, though, would be that they're more likely to actually monetize the asset. I would imagine that there's a few operators that would be interested in this type of asset, given that it's in the continental US and given the size and scope of this project.
Got it. And any thoughts as to why Sailfish has been the best performing mining royalty company over the last 45 days?
I think it has everything to do with the fact that the clarity regarding the permitting timelines and the scope, understanding of the scope of the project is the main driver. And that being said, if you do the math, I used to cover the royalty space. If you do the math, we're still trading at a significant discount relative to our peer group. We've been aggressive with our share buyback. We're letting the market digest this news, and then we'll most likely be stepping up our buyback to a higher level, given that how cheap the stock is using basic math.
Okay, thank you. And so possibly a follow-up question to that. Assuming Sailfish doesn't get bought out between now and production at Spring Valley, what would be your capital allocation strategy once the heavy cash flows start rolling in from Spring Valley?
So, I mean, it's always a balance between growth and returning capital to shareholders. Here at the management here at Sailfish, we've bid on a number of royalty assets that are out there. We're trying to, grow the company. It is a competitive space. It's probably a space that needs to consolidate. I'm a big believer that the space has way too many companies in it. So a consolidated space would probably be more efficient in terms of allocating capital. But that being said, as a management team, we remain disciplined. We have a few growth ideas that we're working on right now. and if we're successful, we're able to move that forward to companies. But in terms of overall philosophy, it's always a balance between returning capital to shareholders and then using that capital for growth. But you got to do it in a disciplined fashion.
And then touching on Moonlight, there's an audience question. I have read in old geological reports that there was some uranium found on the Moonlight property. Does the royalty cover all minerals found on the property?
I'd have to double check, but off the top of my head, I believe it covers all mineral production.
Okay. And can you remind us who is the owner of Moonlight?
Moonlight is the same owner of Spring Valley. It would be Waterton,
okay,
which is the private equity group.
Got it. Thank you. And then just touching on San Albino quickly, would the transition to underground mining affect the royalties payable to Sailfish?
So 99% of the cash flows that are coming from the San Albino operation is coming from Las Conchitas, where we have a 2% NSR. There is some residual production from other areas where we have what is the equivalent of a 3% NSR. The underground would fall under that stream structure, which would be equivalent to the 3% NSR. So you're looking at nominal production from the underground in 2025. It then starts to ramp up in 2026, so that, you know, there would be some additional cash flow there. We don't incorporate it in our budgets as of yet, but you know, it has serious implications to both the cash flows that are coming from Nicaragua, but also from the standpoint of the silver option agreement as well.
Mm-hmm. Okay. And then would you ever consider buying another royalty company?
Yes, if the deal made sense for Sailfish shareholders.
Okay, makes sense. And then you mentioned the silver option. Can you tell us a little bit more about that? Like what would have to happen upon exercise?
Yeah. So what I can tell you is we've had our board meeting yesterday regarding the silver option. Then we would have to put forward the agreement to Mako, and then it would get signed, and then we would announce it to the marketplace.
Okay, got it.
So the idea is we would want to have this all buttoned up, you know, before the expiry of the first deal. Doesn't mean that we don't retain the option, but you know, obviously it makes sense for us to have it, so it would immediately flow into the cash flow from there.
Got it. Thank you. And just a question about the NCIB, you know, before in the near term, are you looking to continue with share repurchases under the NCIB?
Absolutely. I mean, anytime that you're looking at the stock and that it's trading at a significant discount to where the fundamental value is, you would be repurchasing stock. And so we've been soaking up stock, you know, at $1.30, at $1.40, then at $1.50, and now you're dealing with gold prices making all-time highs here. And you look at the basic fundamental net asset value of this asset that's about to get permitted and start construction here in short order, and it makes sense for us to buy back our own stock. If the market doesn't like it, we'll take it. I own stock. The rest of the management team owns stock. Directors have been buying stock. If you look at the filings, insiders have been buying aggressively over the course of the last few weeks.
Got it. Thank you. And possibly one last question on Spring Valley from me. Is it located on federal or private land?
So it's on federal land. That's why we're going through the NEPA BLM process. That being said, that executive order is talking about streamlining it. Hence the reason why I believe the operator feels so confident that they're going to start construction in the second half of 2025.
Got it. Thank you. Well, I don't see any further audience questions. I think you answered all the questions I had. Was there anything else you wanted to mention today, Paolo, we didn't get to?
No, I'm super excited. We've been marketing about this company for the better part of 9 months. And despite the fact that we've had some movement in the stock, it's still not reflective of the underlying value. We encourage people to kind of do their homework, look at the data that's out there and do the math, but we're pretty excited on what this company is going to look like even in 6 months' time.
All right. Well, thank you for the update. Thank you to the audience for all the questions. If anybody has any other questions, please email us at info@adcap.ca and we'll get those to Paulo. And with that, thank you and have a great afternoon, everyone.
Thank you.